Hello, I'm Greg Hunter. Welcome to USAWatchdog.com. Today, Charles Biderman, CEO of Trim Tabs Investment Research, is back. He's always colorful. Charles Biderman, thanks for joining us here on USAWatchdog.com.
Thanks for having me back.
Well, I know you know a lot about trading. I know you used to do research for Barron's. I mean, you're basically kind of an investigative investment manager, investment newsletter writer, whatever. You're an investigator to find out what news is relevant, which way the markets are going to go. What's going on with this Knight Capital? I mean, you know, we've had the bankruptcies of MF Global and PFG Best. Now, Knight's not bankrupt, but, you know, they lost $400 million, more than $400 million in what, the span of 40 minutes? Is that a problem for small-time investors? Is that something they should be worried about? Is that a signal that there's more risk out there than what, you know, should be? So it looks like Knight Capital Group was a victim of flash trading, you know, where they can make 1,000 trades in a thousandth of a second or something crazy like that. Should this flash trading be illegal?
I don't think so. I think that, markets are the markets. And look, billions of dollars have been spent to speed up the investment process to, arbitrage the gap between trade is entered and it gets executed. So there's, they've gotten to where there's no more money to be made by that. So I don't think it needs to be regulated. I think in this low volume era, there's just not a whole lot of money to be made by those guys. So I think their activities are slowing. I believe Knight Trading when they say this was a operational error, the system went, a new thing went rogue. That happens. That it cost them $400 million. Well, you pays your money, it takes your chances. As to Knight Trading itself, they're the market makers for Trim Tabs Float Shrink ETF, our ETF, which is outperforming the markets, if I could say so myself. FINRA doesn't object. And they do an excellent job. So even if if Knight Trading doesn't survive, I'm sure their market making capability will. They're one of the best on the street at doing that. And the people who do that, they could do it for XYZ firm as easily as Knight Trading. So that's why I think Knight Trading will be taken over or new management or whatever.
Do you think Knight Trading will be taken over? At some point, somebody else is going to be running Knight Trading, or it's going to be called something else?
Well, no, I think that the new investors now control 80% of the equity in Knight Trading, so it has been taken over. And the people, and I think that's what I said was that they took them over and keeping them on with like 20% of the equity to run the operation because they did a great job and they screwed up.
You have been recently pretty bearish about the stock market here in the U.S. and overseas. Let's start overseas and work over here. Why? You're saying that you don't think there's going to be much growth at all, in the stock market. Are you predicting some sort of a crash? Are you telling people to get out of stock?
Let me just say that I have some Biderman's Market Picks, which is a weekly, $10 a week report available on our blog site, $260 a year to promote my own activities. And we've been, since we started May 29th, the model portfolio is actually flat, even though we're 32% short, 19% long. One of the things we are short is Europe. There's no way Europe taxable income subject to taxation is not generating anywhere near sufficient tax revenues for European, even, Xing out Germany, that to pay current government expenses. So there's massive deficits. And given the way things are, there's no way that taxable or income subject to taxation is going to grow very much, given all the restraints, the inability for entrepreneurs to start things in Europe, the rigidity, the bureaucratic rigidity, all that is restraining economic growth. And so you have countries where incomes can't grow, government expenses well exceed tax collections, and that doesn't even include the trillions of debts that can't be repaid. So what's the European Central Bank going to do? They're going to print another trillion. I mean, is Germany going to guarantee $1 trillion? Will Germany guarantee Spain's debts without Spain agreeing to let itself be taken over by Germany, in essence? I mean, why would Germany give them $1 trillion? I mean, that's apparently what they need, or 300 billion, I'm sorry, or 400, whatever.
400 billion.
Yeah, 400 billion to pay for the provinces, for the banks, for the government. I mean, and Spain is not generating any taxable revenues to even pay current expenses. So the fact that Spain is willing to, the Spanish prime minister is willing to consider asking for a bailout, i.e. letting Germany take over, makes the markets go nuts. It's making me nuts looking at that.
You think Europe is going to implode at some point? Does the euro make it?
It has to implode. Will the euro make it? Well, I think it might be half a dozen currencies surrounding Germany, and everything else will be on its own. I just don't see, will the banking system survive? Probably the big guys won't, but so what? It's always, the next guys come up from the middle. I mean, what's wrong with this? Why do we need to, print trillions of dollars to save these banks that was so dumb to create the problems we're in now?
How about the U.S.? Is the U.S. in just as bad of trouble as Europe? I mean, everybody's expecting Bernanke to ride in with a fine white Charger and print crazy amounts of money. He basically said the economy is in sad shape, but we're not going to print any yet, is what he's, the double speak means. Do you think we're in big trouble? And is that any way to trade a market? I mean, if you're beholden and depending upon the government to print money to float your stock portfolio, how healthy is that market?
QE1, starting in March of 2009, boosted stock prices by 50%. After QE1 ended, stock prices sold off 20%. And then QE2 was announced in August 10. So you had a 50 up, 20 down. Then QE2, stock prices went up 40% before topping out. And then they again dropped 20%. That Operation Twist was announced, and stock prices are up 30%, and they're only down a few ticks from the 30%. So I think the Fed will next act after stock prices drop 20%.
So you think the next time we're down 20%, boom, the Fed's going to stick its foot on the accelerator?
Given the trend that it keeps the marginal impact of another round of Fed easing is less and less and less, it probably won't get stock prices up very much, and I don't think they would want to do it because it won't work. And look, you can't. I mean, the U.S. right now, nominal wage and salary growth, which we track, which is to me the most important data point, which is available in real-time data, says wages nominally is growing around 3% year over year, and it has been at this rate since April, 4 months now, at plus or minus 0.1%, either way of 3%. That was down from, for a 5-month period, 3.5% growth from November 11 through March of 12. So, and then before that, it was 4%. So nominal wage and salary growth before inflation has been declining steadily over the past year. And I think, it's the impact of slowing growth in Europe and the emerging world. Now, remember, we're talking about 3% growth, which is $200 billion a year. The U.S. government is spending $100 billion a month in deficit spending. They collect $200 billion, spend $300 billion, borrow, print $100 billion. So they're printing $100 billion a month, $1.2 trillion or $1.3 trillion in actual numbers for this year. And incomes are up $200 billion a year, wages and salaries. So that says that this tremendous amount of money pumping into the economy is not generating any growth. So I'm saying that this is, we have stock prices at or near an all-time high. Housing prices are down 50% from their high. I see no reason, absent Fed rigging of the market, that stock prices shouldn't be down 50% from where they are now. I don't think it's going to happen overnight, but, that's my opinion.
You think we're on our way? They just had their labor report out last week, and they said that they grew 163,000 jobs. But people like John Williams at Shadow Stats and other people say you strip out the seasonal factors, you strip out the seasonal adjustments, and you take a look at the real, a household survey, and we really lost 190,000 jobs. What do you say?
I say that their data is so worthless on the initial release that it's not even worth talking about. They survey 141,000 employers each month. There's millions of employers, as far as I'm aware. They survey 141,000. And from the responses, they extrapolate to the entire economy. Between the initial number and then 6 months later, when they get data from the states from quarterly unemployment claims, then they true their data. So their initial data could be off by 100, 200,000 a month. And when it's revised, nobody's going to care. But everybody trades the current number like it means something. Our data, nominal wage and salary growth, says jobs are growing about 100, 115,000 a month. Historically, the final number from the Bureau of Labor Statistics, after they get, 6, 7, 8 months in arrears, the final BLS number is pretty close to our original number, and our original number is much closer to the final number than the BLS initial number. Does that make sense? I'm just saying, ignore,
In other words, in reality, we didn't grow 163,000 jobs, according to you. Probably grew about 110,000 jobs.
Yeah, in reality. I mean, with their seasonal adjustments, it's, and the truth, I keep talking to anybody, but nobody seems to care. Real-time data on income and jobs is available. It's embedded in the withheld income and employment taxes all employers send to the Treasury every day. And included in that, if the BLS or the BEA wanted to and asked the Treasury to release aggregate data, do we know how many people are working in real time, how much they're making, what industry, new jobs, all this data would be available in real time. And instead we have a survey of 141,000 employers.
You're saying we could know the accurate number, boom, every day or every month, or we could know the accurate number instead of the surveys and all the other. Just look at the real numbers at the Treasury is what you're saying.
How would and why how can you run an economic system based on third world data sources?
Surveys, correct. All right, so I guess Europe's probably not going to do very well coming up. They're in deep trouble. They don't have any income to pay for all the taxes that they, all the things they need to pay for. They don't have enough taxes to pay for everything. The U.S. is plunging itself into deep, deep debt every month by more than $100 billion a month. So where do you go? Where do you hide? Do you buy physical gold? And before I get there, do you think we could have some sort of a financial collapse? Do you think we're going to have some sort of financial collapse between now and next year?
Well, I think we could have the equivalent of bankruptcy by the federal government. In essence, Spain is bankrupt. They can't repay their debts, and they're having to refinance and restructure everything. That's in reality what's going on. We likely will have the same thing. The question is, do we handle it as grown-ups, or do we get mad and throw hissy fits and kill each other? I'm hoping that that as it occurs and we have to restructure the way we do things in the U.S., that it's done as grown-ups.
Well, you're talking about we're going to have some type of a meltdown, some sort of a collapse, a crash. If the United States government says it's bankrupt, or it's widely thought that the U.S. government is indeed bankrupt, isn't that going to be the setup for a big, giant crash financially for everything?
After Europe goes. Let's say Europe, goes down and they have to restructure and they have to redo things. Then it's like in the U.S., okay, we're spending $300 billion a month and we're collecting $200 billion and we're printing $100 billion. The people we're giving that $100 billion after Europe is restructured, are they going to say, hey, wait a second, I don't want your 100 billion anymore. It's not worth anything. It's paper, or at least we're not going to take it and charge you and give you, take a 20 bips a year or 20 bip for 2-year, interest rate on lending you money. No, if you're no longer the safe haven in the world and Europe's restructured so their currency is sound, why do we need your garbage dollar? So I think that's when, I think Europe first, U.S. second.
You're holding physical gold and silver?
I say yes. Well, I don't know about silver so much. It's too bulky. Gold, the problem with silver, if you have physical silver, you need a big space. You don't need so much. So I would recommend buying 1-ounce bars of gold on a regular dollar cost averaging basis and keep it at a safe space. And also inflation protected. The Biderman Market Picks model portfolio has 23% gold, 25% inflation protected securities. We're 32% short, which is the big banks, Europe and emerging markets. And we're long tech, trim tabs, flow shrink ETF, Apple, Amazon, Whole Foods, stuff like that. On the other side. So, I think even if the U.S. government does go broke, technology will continue to prosper globally. And so I see technology as a really cheap way to be long stocks, regardless of what happens in the financial markets.
And final question, what do you think about people like, because you're already on this wagon, you get 23% of your picks are of some sort of gold pick. People like Bill Gross at PIMCO and Ray Dalio at Bridgewater, big money managers, they're all writing in their newsletters recently that they're thinking about buying some gold. What do you say to them?
I say, what else could, look, if you have Europe, the United States, Japan, all printing money to pay bills, what else is there besides gold? That's why, and inflation, and inflation protected securities too. If, at some point all this money printing has to create inflation.
Charles Biderman, CEO of Trim Tabs Investment Research. Thank you for being on USAWatchdog.com.
Thank you.